Exchange-traded products, known as ETPs, are derivatively priced securities that can trade throughout the day on an exchange such as NYSE Arca. There are 3 different kinds of ETPs. The first type is the exchange-traded fund, known as an ETF. An ETF is an investment product that allows investors to buy and sell shares that represent a fractional ownership interest in a portfolio of securities held by the ETF. Like a mutual fund, ETFs are open-ended investment companies registered under the Investment Act of 1940. They are typically passively managed index-based products designed to match the performance of an underlying index. The second type of ETP is an exchange-traded vehicle, known as an ETV. It typically provides investors exposure to underlying assets such as futures contracts, commodities, or currencies, without requiring the investor to actually trade futures or take physical delivery of that underlying asset. However, the ETV generally holds a position in that underlying asset or contract. ETVs tend to be more concentrated in specific commodities, such as gold or silver, or commodity futures such as oil, natural gas, or even corn, and are registered under the Securities Act of 1933 instead of the 1940 Act. The third type of ETP is the exchange-traded note, known as an ETN. An ETN is a debt instrument, more specifically a senior unsecured debt obligation that is generally designed to track the total return of an underlying index or strategy. Unlike ETFs and ETVs, where the securities are held, ETN issuers may or may not hold that underlying asset. In addition, ETNs are subject to certain credit risks. They are also registered under the Securities Act of 1933. There are many purposes for an ETP. One purpose may be to diversify one's investment portfolio. Another may be to hedge against a current investment. And still another is to gain exposure to hard-to-access markets or asset classes, particularly with ETVs and ETNs.
ETPs are different from other investment products such as stocks and mutual funds. For example, stocks have a finite number of shares and their prices are driven by the supply and demand for that finite number of shares. ETFs and ETVs, on the other hand, can create additional shares based on demand. For ETNs, additional notes may be issued. In general, the price of ETPs correlate to the prices of the underlying instruments in their portfolio or the values of the indices they track. In addition, as compared to mutual funds, which are only issued and redeemed at the end of the day, although orders can come in at any time during the day, ETPs can be traded throughout the day. ETFs and ETVs are also transparent in their holdings on a daily basis. The issuers typically make available a list of their fund's holdings, and this information is usually available on their website. Historically, ETPs have been more tax efficient and have a lower expense ratio in comparison to mutual funds.
It is important for investors to understand how to determine the value of an ETP and to understand how they are priced. As with common stocks, ETPs trade on the stock exchange at prices where buyers and sellers meet. Market orders start to buy at the lowest displayed offer price and start to sell at the highest displayed bid price. But because there is no price limit on market orders, in a thinly traded ETP, the order may sweep through the book, resulting in an average execution price that is quite different from the bid and the offer at the time that the order was placed. Limit orders allow you to specify the price at which you are willing to buy or sell. The net asset value, or NAV, is calculated for ETPs just like it's calculated for mutual fund shares. At the close of the regular trading day, the value of the fund's assets minus its liabilities using that day's closing prices are divided by the total number of shares outstanding. The indicative optimized portfolio value, or IOPV, also known as IIV or INAV, represents the estimated value of an ETP based on the real-time prices of the underlying securities. IOPV data points are generally published every 15 seconds throughout the trading day, although if the underlying securities are listed overseas, the IOPV will show a static value when those markets are closed. So while the IOPV may represent an appropriate measure for an ETP's fair value, true price discovery of an ETP is more often reflected in the security's secondary market pricing.
ETPs continue to be one of the fastest growing investment products, not only in the US but worldwide. Over the past 10 years, the average number of ETP listings has been growing at close to 30% per year. Currently, close to 1,500 ETPs with assets exceeding $1 trillion are listed in the US. ETP assets represent approximately 9% of assets in mutual funds today, compared to 7% 3 years ago. And last year, there were twice as many inflows into ETPs than there were into mutual funds. And in the past 6 months, there was a record net inflow for ETPs, continuing that trend. Much of this growth can be attributed in part to the industry's efforts to educate investors on how these products work. If you would like additional information on our exchange-traded products, please visit our website at etp.nyx.com.